Now, the Monetary Policy Committee of the Bank of Ghana has kept the policy rate unchanged. It left the rate at which it lends to commercial banks at 14.5%. This is about the fourth time since March this year that the central bank has kept the rate unchanged. Speaking at a news conference a while ago, the governor noted that there are still some risks on the fiscal front, hence the need to hold the rate.
7 million, compared with a deficit of 1,497 million US dollars for the same period in 2019. The current account outturn was supported by stable inflows in current transfers, especially remittances, and the lower net investment income outflows, particularly profits and dividends. The improvement in the current account was offset by lower inflows in the capital and financial account, which recorded a balance of 366 million for the first 9 months of 2020, compared with 2,273 million US dollars in the same period in 2019. This was attributed to the lower than projected inflows from FDIs and portfolio investments, and resulted in an overall balance of payments deficit of 676 million for the first 9 months of 2020, compared with a surplus of 879 million US dollars for the same period in 2019. Gross international reserves at the end of October 2020 was 8,627.4 million US dollars, equivalent to 4 months of import cover for goods and services. This compares with 8,418.1 million, equivalent to 4 months of import cover recorded at the end of December 2019. Cumulatively, the Ghana cedi at November 18, 2020 had recorded a depreciation of 3.1% against the US dollar, compared with a depreciation of 10.1% over the same period last year. Summary and outlook. To summarize the developments, the committee noted that global GDP growth rebounded in the third quarter of 2020 after the sharp fall in the second quarter, but is expected to slow down in the last quarter as rising COVID-19 cases moderate the recovery process. The supportive global monetary policy stance, together with fiscal stimulus packages, is likely to persist over the medium term to support the recovery process. Consequently, global financing conditions are expected to remain favorable in the near term. On the Ghanaian economy, evidence from the high-frequency indicators, the CIEA, for example, improved. Consumer and business confidence and strong liquidity flows have helped to deliver a faster than expected recovery in economic activity. These flows include payments to contractors, SDI depositors, clients of SEC licensed fund managers, micro and small business loans provided by the National Board for Small-Scale Enterprises, and the policy and regulatory reliefs granted to banks and SDIs. Based on these observations, the bank maintains that growth will perform better than earlier projected. The committee noted that performance of the banking sector remained strong. The sector recorded strong growth in deposits and investments, and solvency indicators were significantly higher than regulatory thresholds. Pandemic tail risks, that is, pandemic-related impact on non-performing loans, would require continuous supervisory vigilance. On budget implementation, the committee noted that the expansionary fiscal stance to address the COVID-19 pandemic has also led to a deviation from the path of fiscal consolidation. Looking ahead to 2021, a decisive fiscal correction plan would be needed to contain fiscal risk in the medium term. The committee noted that inflation has eased following the spike to 11.4%. At 10.1% for October 2020, inflation is almost at the upper band target. The fiscal and monetary policy measures, which have increased liquidity in the economy appeared not to be impacting inflation, partly due to the existence of the output gap. As a result, the committee expects these conditions to support inflation to return to its central path by the second quarter of 2021. To conclude, the committee noted that macroeconomic conditions have generally improved relative to conditions at the time of the last MPC meeting in September 2020. Global conditions continue to be supportive. Domestic inflation is easing. Growth prospects are improving. Crude oil prices have stabilized. Monetary aggregates have expanded, but with minimal impact on inflation. The current account deficit is stable. Remittance inflows has remained firm. The exchange rate has been stable, and reserve buffers continue to remain strong. The key risks are the evolution of the budget deficit and the financing needs to support budget implementation and the uncertainty surrounding the pandemic. Under the circumstances, the committee decided to maintain the policy rate at 14.5%. Thank you.
Well, and that was the governor of the Bank of Ghana, Dr. Ernest Addison, there making that announcement. We're joined on the phone, of course, via link with George Riafi. He joins us live from the Bank of Ghana. So, George, grateful that you joined us. What are the reasons the governor did give for holding the policy rate at 14.5%? Hello, George. It seems we're having a delayed feed there, but we shall try and get George to fix that particular issue so we get back to him. Of course, as we hear it, let's get back to George on that update.
And as it is the key lending rate, or the rate at which the Bank of Ghana would want to lend to the commercial banks out there. Now, the governor, in announcing the decision to hold the rate at 14.5%, said that there are still some risk on the fiscal front in terms of how government raises its revenue and spend, and also talk about COVID-19. Therefore, due to some of these risks, it might be still prudent to hold the rate at which it lends to commercial banks in the country at 14.5%. Now, Charles, you want to look at this rate as key in the determination of the cost of credit and even interest rates in the country for the next 2 months. And that is why okay, and Charles, also the governor also spoke about a bit about the debt stock and what it means and the implications as well. The governor said that yes, of course, the rate has been going up, and that has really got to do with some COVID-19 related expenditure, and also the fact that government has to do some expenditure as well on the banking front. So these were some of the key things that actually left the rate actually going up as well. Now let's come to the Ghana cedi as well, and also the fact that he looked at the Ghana cedi as being in relation to the fact that, listen, they are very confident that going forward, the Ghana cedi will be quite strong because they are building quite strong reserves going forward. But Charles, I have with me here banking consultant Nono Tuichampon. He's been monitoring developments here, what the governor said. Now, Nana, my first question is that, what do you make of the Bank of Ghana decision to keep the rate at 14.5%?
Well, can I take it? Well, I think that question has been rehearsed over and over again, in the sense that with the positives that we saw both at the macro level and especially at the banking level, one would have thought that the rates will come down. Because in the midst of this pandemic, most jurisdictions are taking positive stimulus packages to ensure that they're able to kickstart their economy. Though we are a little bit lucky in the sense that the economy is picking up. But an added stimulus would have helped, but they've got access to the books and they reckon that they want to be err on the side of caution by being more cautious. Yes.
Let's also talk about the Ghana cedi and the Bank of Ghana's optimism about ending the year on a good note and also building quite strong reserves for the expected Q1. Are you satisfied with the assertions or the measures that the Bank of Ghana is rolling out to make sure the city is quite strong come next year?
Yes, because I think that one, empirically, they've been able to achieve it. And therefore, by looking at the measures that they are taking, we can support what they are doing on the city front.
If you look at the policy rate again, I mean, yes, of course, it's more of a signaling effect. But if you look at all the indicators, they are performing that strong. Do you think that indirectly that could impact on interest rate going forward, even though the Bank of Ghana might not review its policy rate? Because if I look at inflation is trending downwards, other critical indicators are going down. Well, maybe the commercial banks will look at that and say that, okay, based on these indicators, I could review my cost of credit.
Yes, I think the statistics confirm that the high rate of interest means that people are not borrowing as much as expected. If you look at the growth in deposit, around 27%, the growth in credit has actually come down. Last year it was 17.2, now it's 13.7, which means people are not borrowing, and therefore the cost of credit is seen as high because the cost of money is seen as high. So I think the earlier something is done about it, the better. Unfortunately, time has gone past. We can't see anything until the next year that we could see the rate being changed. But it's a missed opportunity, if you ask me, so that we could stimulate the economy more. Let's look at the income generation side, especially now that we are going into the African free trade area. You've got to look at what the other economies are doing. Other than that, we will find that our cost of production is so high that we will price ourselves out of the system.
And finally, the governor was also quite optimistic about growth picking up. Could that also impact on cost credit dynamics in the country going forward?
Well, his optimism may be shared, but on my side, I'm saying that the cost of money is a very important factor. And therefore, I would have preferred to see the cost of money coming down so that businesses can borrow more and generate more income and help with the unemployment situation that we have. So we appreciate his optimism. We also share our...
Trace would have want more. So, Charles, that is the note to jump on. He's a banking consultant sharing his thoughts about the decision of the Bank of Ghana to hold the policy rate at 14.5%. Well, the debate will still go on as to whether it should have gone down further to stimulate growth or not. From the Central Bank or the Bank of Ghana at High Street, this is George Jaffe reporting for Marketplace.
We're so grateful, George, for that particular update. Many thanks for giving us that report, interacting with Nanato Ochampon from the Central Bank. As it stands now, as you've been hearing from my colleague George Rafi, the Bank of Ghana has maintained the policy rate at 14.5%. We shall be keeping an eye on this, on how it impacts the economy moving forward. But you're still watching the Marketplace. We're going for a short commercial break. We'll be right back.